Yo, good afternoon, good afternoon. Today's video is going to be a trade recap for August 26th, 2024. And yeah, let's get right into it. So, first things off is I want to take a look at the economic calendar before I dive into the technicals. So, on Monday, we didn't have any red folder news. All we had was 2 orange folder news at 8:30 Eastern Time. Alright, so let's get into the technicals here now. So on the bigger time frame, 4-hour time frame here, before we even opened up, before we closed here on the 10 a.m. open, I was already in the, I told myself here, I'm going to trade intraday models just because of the way that this weekly candle closed. I can't tell if we are going to continue higher to attack previous week's high or continue lower to attack previous week's low and rebalance the weekly fair value gap. So with that in mind, I was going to stick to trading intraday models. My two confluences here were, if we had a 4-hour candle closure above this 4-hour SIBI, if we had a candle closure above it, I would then target previous week's high and favor buy side. But if we respect the 4-hour fair value gap, then I would like to see us attack previous week's low and rebalance the weekly fair value gap. So on the hourly time frame, you can see a little bit clearer too. And this is what prices look like at 10 here. So we opened up at, this is where we were at. Okay, so now I'm already anticipating, okay, so ES, we had SMTs with ES here. So I have a monitor where I'm looking at all 3 of the indices, and I was able to call out, okay, well, we just took out previous day high on ES, whereas NQ is nowhere near its previous day high. So already coming into the morning, like I said, that SMT for me was, okay, that suggested that we're going to see lower prices and probably reverse and take out all of this, sell side level right here. I wanted to see all of that sell side level get ran. And if you guys watched the live stream, or if you guys were on the live stream, I did note how the move down, if we do, turn bearish, we're not going to have much retracements because all of this is low resistance liquidity. That means the move down to take all of that liquidity is going to be a really fast and energetic move. And yeah, the 4-hour candle closed at the 10 o'clock open and the 8-hour close as well. And based on those 8-hour and the 4-hour closure, I could anticipate for us to take out the 4-hour and 8-hour low, and which we did end up taking. So pay attention to this 4-hour candle right here and this 8-hour candle. So it's an indicator. This isn't like on everyone's charts. I have an indicator that shows me the higher time frame candles relative to my hourly chart here. So I have the 4-hour, 6-hour, 8-hour, and 10-hour. Some people think it's a lot. For me, it just helps me stay in tune with narrative and with the higher time frame narrative, and really trading on side with the markets. So we had a really fast move down, taking out all of this sell side liquidity, and we even took out previous day low, August 22nd low of day, and previous week's low. And previous week's low was my weekly objective this week, or at least that's the weekly objective now. So we took out previous week's low, and in this move down, I wasn't able to find a single entry pattern or an entry model, even though from where we were here, I already knew that we were going to continue lower here. We are going to attack just because of we respected this hourly FEG. So we didn't get a candle close above it, and we respected it. So if we were bullish here in this scenario, at 10 o'clock, we would have closed above it and then treat it as an inversion to continue higher and even take out previous day high. However, that wasn't the case, and we actually respected the hourly FAG, and we started to create these bearish power of threes here. Like I said, the 4 hour and the 8 hour. So with the first initial move down during the New York AM session, I wasn't able to get in any of that move. However, we did create a hourly SIBI with that move down, right? So during the lunch session, we actually got a retracement back into it, and then coming into the New York PM session, we had a we respected the hourly fair value gap. So let me note that out for you guys here. So we respected the hourly fair value gap. And what I mean by respect is that on the lower time frames, you're going to be able to see clear, candles, how the candles are treating that hourly fair value gap. So we tapped into this hourly fair value gap that we created with the displacement move lower here. And notice the candles that we create following that. We create these, bearish candles, right? So now I'm just trying to find a model where I can align power of 3 with the higher time frame narrative. So the higher time frame narrative is that we had SMTs at the highs here. Remember that ES swept previous day high and NQ didn't. So that was the first initial higher time frame narrative. We disrespected we respected the hourly SIBI at 9:30, and yeah, we just sold off. We took out previous day low. So now I'm just waiting for the retracement back into some sort of PD array, some sort of bearish PD array, and then having a reaction on the lower time frames, which is exactly what's occurring here now. We had a reaction to a hourly fair value gap on the 15-minute time frame. So now I'll go over the trade model that I took here. So the trade I actually took was, I believe it was, so it was this candle. It was based on how this 15-minute candle closed right here. So based on this 15-minute candle's closure, this 30-minute candle's closure, and this hourly candle's closure, I can anticipate for prices to take out the hourly low, the 30-minute low, and the 15-minute low. That is my concept time frame alignment. We have 3 different time frames here that have the same objective, which is to take out their respective lows, right? And I'm gonna go on to the 1 hour time frame here to show you guys something. But notice how this 6 hour candle closed as well. We closed here on the 6 hour candle. We had a bearish 6 hour closure. We also had a 4 hour and 10 hour bearish closure. So we have about 6 different time frames telling us, hey, we're going to continue lower here. So I go onto the 15-minute time frame, like I said, and I trade that 15-minute model because they have the same, because the 15-minute is aligned with the higher time frame. So that's telling me we are going to go lower now. There's another video on my YouTube channel where I explain to you guys how higher time frame might be bearish, but on the lower time frames, it's not aligned with the higher time frame objective yet. But in this trade specifically, the lower time frames is aligned with the higher time frame, and it's showing it through the 15-minute candle's closure. And I took into account how we created this 15-minute fair value gap here, right? But I don't take an entry at the 15-minute fair value gap to attack, the 15-minute low, the 30-minute low, and hourly low. I actually treat this 15-minute fair value gap as a breakaway gap. And whenever I say breakaway gap, all I'm saying is I don't want to see prices retrace back inside that fair value gap. I want to see prices leave that fair value gap open. So I want to see us retrace into a even lower time frame relative to the 15-minute time frame. Retrace into some sort of like a 5-minute PD array or a 3-minute PD array and continue lower. I don't want to see us retrace all the way back to the 15-minute fair value gap. So with that in mind, breakaway gap. And with that in mind, I'm going to go into the lower time frames to find an actual PD rate, an entry model, right? So I do believe I took this trade here based off of the 3-minute time frame. And on the 3-minute time frame, we had created a 3-minute fair value gap. So this fair value gap is better known as a SIBI, sell side imbalance, buy side inefficiency. All that means is that it's supporting lower prices. So I take my entry whenever prices retraces back inside this 3-minute fair value gap, and all I'm targeting here is the 15-minute, so 15-minute, the 30-minute, and the 1-hour low. And once we take out the 15-minute, 30-minute, and 1-hour low, I move my stops to break even, and I take partials here. So that's exactly what happened. So we opened up at 2 o'clock. We retrace back inside this 3-minute fair value gap, and then we take out the 15-minute, the 30-minute, and the 1-hour low, and then I move my stops to break even, and I take partials. I do have a trade execution video on my YouTube that will come out probably the same time this video comes out, so make sure to watch that video before or after this. I don't know which one you guys are gonna watch first, but really watch how I'm not talking in the video, but watch how I'm annotating the charts. I do now understand what ICT means by, like, he can't live stream and trade at the same time. I think handling that it's a lot of pressure. Like, there's you're streaming in front of, he's streaming in front of like 10k people. I'm only streaming in front of like 3 people, but even streaming in front of 3 people, it's my ego that's telling me, hey, I want to get this correct in front of all these guys so I can tell them that, hey, I know what I'm doing. But it doesn't work like that. Sometimes you're going to take losses, and I don't know what I'm rambling about, but yeah, I have my executions. I'm annotating the charts, and whenever I annotate on the charts, it kind of keeps me grounded. It kind of keeps me, really information based, not emotional based trading. I'm trading only purely based off information. All right. So like I said, I enter off of the 3-minute fair value gap, and once prices takes out this 15-minute low, I move my stops to break even. So I do want to note, look how close prices comes to taking out this 15-minute fair value gap, or this 15-minute low, before giving me an entry. Look how close we get. So we open up at 2 here, right? We open up at 2. Look how close prices got to taking out the 15-minute low. We came really close to it. I'll zoom in for you guys, but look how close we got to taking out that 15-minute low. So close. And in my head, what's going on in my head right now is, oh crap, the objective is about to be taken, and I'm not gonna get to be a part of it. That way of thinking is, I have to discard that way of thinking. If the objective is already taken, it's so simple. All I have to do is close the position. There's no need for me to enter that trade anymore if the objective has already been taken. So that's just something that I can work on. But in this case, the objective hasn't been taken yet, and we came really close to taking out the 15-minute low, but we retrace, and then we take out the 15-minute low. That, to me, today's trade was an A+ setup. I would give this trade an A+ rating here. Very, very good execution on my part. I handled my emotions pretty well, and I do want to discuss how I was able to hold this trade, because I know you guys are probably thinking I know you guys probably have some issues about holding trades, or maybe holding for 4 targets, and even 3 minutes being in a trade can feel like an eternity. If you guys are like traders, and you guys have taken an actual entry, then you guys know what I'm talking about. How 5 minutes can feel like 15 minutes. 15 minutes can feel like an eternity. But one way that I was able to kind of not necessarily block off that emotion, but kind of accept it and just simply embrace it is I was able to use power of three as a little bit of a mitigator. I mitigated that emotion. So while I'm in this trade, right, pay attention to how this 5-minute candle closed. This 5-minute candle closure, what can you tell from this 5-minute candle closure here? We retraced back inside a 15-minute, or we retraced back inside a 5-minute fair value gap, which is basically the 3-minute fair value gap that I entered off of. And I didn't notice this, but look at the way we respected the consequent encroachment. That's algorithmic pattern. Respect of a consequent encroachment is like, you want to see that. That's just something that's really, really, spot on. It's precise. But back to my original question. Look at how we created this 5-minute candle. This 5-minute candle, what this story is, or what this candle is trying to tell me is, hey, we retraced back inside a 5-minute fair value gap, and we respected it, and we traded lower. So the very next 5-minute candle, I can at least anticipate the next 5-minute candle to be a open, high, low, close. So I wanted to see this next 5-minute candle take out this previous 5-minute candle's low. So with that in mind, you can already anticipate for lower prices, so you can continue to hold that trade. So just think about power of three here whenever you're in a trade. That will allow you to take partials. So in the execution video, I actually took a partial at this 5-minute low, and then I continue to trail my stop loss. Just a really good way of position management. I actually, I don't want to give myself too much praise, but I'm giving myself a little pat on the back here. Like, you did good here. But so I ended up, I think I ended up taking about 12 contracts here in this specific model, and I think I got stopped out with 2 contracts break even. And I was trying to hold out for the 15-minute candle closure, but this 1-minute candle actually just stopped me out so fast, because I wanted to wait and see how this 15-minute candle closed, but we closed bullishly, and just like I said, based on this 15-minute candle's closure, it's not suggesting lower prices, it's suggesting higher prices. So I got stopped out at break even, but with the knowledge that I had in this trade, I took partials off at the 5-minute low, so I took off another partial here. 5M low, and yeah, that's gonna be my trade recap for today, guys. Thank you guys so much for watching, and I will actually go over what I am anticipating for tomorrow, just so it's a little bit clear here. So tomorrow I actually am anticipating I want to see prices actually take out previous day low here. So even though we're bullish here on the weekly time frame, we have this massive weekly imbalance, on the daily time frame, at least I can anticipate for this previous day low to be taken. I want to see previous day low get taken. After we take out previous day low, I would then switch to trading intraday models and targeting maybe session-based liquidity, hourly highs and lows, 4-hour highs and lows, and etc. But what I'm anticipating for tomorrow, like I said, previous day low to be taken. And with that, that's gonna wrap it up for my video. Thank you guys so much for watching, and until next time, peace out. Boom.